I'm about to backtest 432 AI trading strategies to see which one is the best. I've created a custom, and this took weeks by the way, backtesting tool, which can backtest custom strategies, so I can build them myself with Claude Fable. I can literally voice prompt and create a strategy from scratch. And I can also compare the best strategies in the market. I'm talking about the most famous strategies that all the top traders use, whether it's an EMA cross, MACD, super trend, Bollinger breakout, volume breakout. We are going to put all of these top strategies head to head across multiple variants of different asset pairs, 432 to be exact, to find out what is the best strategy. Then after that test, we are going to take that strategy. I'm going to show you how to put it into TradingView to test live results. I'm going to teach you about the downsides, the pros and the cons of backtesting, and how to avoid the classic overfitting bias, which usually makes most backtesting results unreliable. And then I'm going to show you how to use Claude, and you can also do the same on GPT, to find the reasons why winners are created, so you can then create your own custom strategies. And this is part of a series I'm doing here on the Deutscher Finance channel to make you an AI trading expert. So make sure you subscribe, hit the notification bell, because every single part in the series is going to level up your expertise and teach you what I've learned over the last almost 4 years now of AI trading bots. I was one of the first people on YouTube to do trading bot videos back in my crypto banter days. And ever since then, the models have just been getting better and better. And I truly believe now we are on the cusp of almost being able to fully automate our trading with caveats, some of which I'll go through today. So the first video showed you how to create strategies on PineScript and put them into TradingView. The second video explained the exact architecture for creating a trading bot either in crypto or in the stock market. Then my latest video showed you how to recreate any strategy. In this case, it was a quant trading strategy where I built a custom indicator on Claude code using the fundamental strategy, the Garch method that pro traders use. And today we are adding to the series showing you how to compare strategies against each other. So all of these other videos, we looked at singular strategies. This video, we're actually researching 432 variants, and then I'm going to show you what the best one is. So before we click run here to see what the best strategy is, firstly, I just want to give you a quick tour of the application that I've created, because I'm right now building the ultimate application to create custom strategies and to test strategies against each other. This is going to be fundamental infrastructure that you'll see me referencing in multiple future videos. So firstly, what I've built is a library of top strategies. I'm going to keep adding to these as we find better strategies. You can also favorite strategies on the application. I have a section to build a custom strategy with Fable. This is connected to Fable, so I don't need to go into Claude and then copy it onto the website. Then what I'm going to show you today, one of the most exciting parts of the application is obviously the compare function. Down here, you can select the time frame that you want to test across. In the strategy library, I'm going to be compiling over time a list of the best strategies. And then if you click results, you can see the results of the prior runs that you have made. I'm also working on a very cool video, which is going to be able to actually scan traders' YouTube videos to see what their strategies are, and then use that to create actual trading bots so we can backtest in a real environment how these trader strategies actually work. Because I feel like AI is such a good way to actually understand the underlying mechanisms of trading. So even if you are a discretionary trader, like I still do heaps of manual trading, I don't think this is one or the other. I really think AI trading is additive. So you want to be force multiplying your existing skill set with AI, using AI to do research, using AI to inform your strategy, using AI to automate execution, which is where a lot of us get unstuck in our trading. But then obviously keep your discretionary edge, keep learning how to manually trade and how to look for fundamentals in the market, because that combined with AI is the best combination. Human traders plus AI are going to be the ones that win. It won't be just pure AI yet, and it won't just be pure human. So if you are just a pure discretionary trader, I feel like this stuff is super interesting, and it's, enabled me to really refine my trading system. So let's go back to the comparison engine here. Let's click run batch. What the app's going to do is it's going to start scanning every single strategy. So it's got over 430 runs to do. You can see they're now completing, but it's probably going to take a couple of minutes. So while this is running in the meantime, I want to quickly explain how backtesting actually works, because I think the word is thrown around a lot, but not many people actually explain it. So essentially what I'm telling Claude to do is use a preset bunch of variables. So the exact rules, the entries and exits based on the most popular strategies across the market in order to run a backtest. In this case, it's going to be 9 years since 2017, but obviously in the application, you can pick the time frame of real data, and I'm running it based on a $10,000 portfolio, and TradingView after will scale it as well, so you can see with bigger amounts how it could have compounded over time. I'm getting this information from 3 data sources, including Alpaca, and Claude is not strategically impacting the backtest. So the backtests are based on the engine, so the rules that I've provided. It's not reading and changing the results. We're going to do that after, but I want the pure data first. So Claude is simply acting in this case as an agent. Then we're going to get a result, which we're then going to be able to export into PineScript and overlay over the chart to see if the numbers match and see how it stacks up under real conditions. This is better, in my opinion, than doing it the manual way, which is asking Claude, hey, backtest this for me, because it has a higher chance of hallucinating versus the data-driven approach that we're taking. And after like many months of experimenting, I'm going down this path now instead of just like manually prompting Claude, because this is more reliable, plugging it into the real data sources and MCPs. By the way, you might be wondering, oh, can I get access to this application after this video? I can't give away access to the full application because it's still a work in progress. There are still things I'm tweaking. There are still things I want to add. When the time is right, I'll explain how you can get access to it because I do plan on making it public. But what I am going to make public, which I'll show you later today, is a GitHub, the full instructions of how you can replicate a similar backtesting system on your own. So after you understand the concepts today and you found the best strategies, I'll give you, using the link in the description below, the free link to the GitHub, which is going to have a ton of information that you can feed into Claude as to the actual systems that are behind this stuff, because Claude on its own is going to hallucinate. You actually need to find the right MCPs and plug it into the right data source. So quickly just checking in, it's done 150 out of the 432 strategies. So it is coming along, but we still have 343 to go. I'm already seeing some pretty good strategies. There are some pretty high win rates here, 40%, 43%, but I'm going to explain the nuance with these win rates, because if you just see the pure number, sometimes it isn't accurate. You need to understand how it performed out of sample, which I'll explain in a second to avoid overfitting bias. You need to understand how many trades it took. Was it executing on high frequency or low frequency? You also need to understand the risk parameters. So if you're taking on 60% drawdowns for a 70% return, sometimes that's less optimal than taking on 20% drawdowns for like a 30% return. Even though you're underperforming, you took on far less risk. So, and you'll know this if you watch my last video of the Garch method, sometimes it's worth accepting returns for better risk-adjusted returns. That's how professional fund managers and quant traders actually view the market. While we're waiting for this to finish, I'll explain what I mean by out of sample, because this is very important. And this is what a lot of people get wrong when they're backtesting strategies. And even I have done basic versions in the past of backtesting strategies which haven't explained this, but I'm trying to like build up the building blocks here on the channel and not just flood you guys with a bunch of data. I'm trying to build this as a proper series. But this is what I didn't tell you in the last video, and to be honest, what a lot of traders won't tell you. If you just take a sample, so let's say you take the last 7 years and you just look at the data linearly, you can fall victim to overfitting bias. What does this mean? Well, if you're running a backtest, you're obviously going to be looking at the strategies which perform the best. But just because something performed really well over the last 10 years doesn't mean it's going to perform well over the next 10 years. Why? Because you're simply looking at the results of that data during that specific time frame. There could be a better strategy, a more optimal strategy for the next 10 years, which performed worse over that period. But because the other strategy which performed better was overfit, more fitting towards the bias of max returns during that time period, then you're going to have skewed data. And it'll be too late. By the time you're actually running that test, you won't know until it actually underperforms over the next 10 years. And then in 10 years' time, it'll be probably a completely new strategy which performs. Which is why today, if you look at the strategy, we actually have an out of sample win rate alongside the overall win rate. So what is out of sample? This is essentially a hidden exam which is not part of the initial test. So Claude has access to the first 70% of data. This is the in-sample data. This is what Claude can basically see and test on. For example, 2017 up until 2024. But then we have a smaller period, which is the out-of-sample period, which we didn't include in the data to actually see how that test performs in the future. This is essentially the equivalent of, let's assume you ran a backtest for the last 5 years from 2021 till 2026, seeing what would happen to that strategy in the future. So you almost have to pretend the present day is 2024 and then use the out of sample period as the following 2 years. Obviously, this is not perfect because obviously the out of sample period is not going to be as data rich. So the sample size isn't as big, but what it's going to do is allow you to compare to see when in sample and out of sample is aligned. Typically, when there's alignment between the in sample results and the out of sample results, that's an indicator that it could be a better strategy. Now, that doesn't mean it's the perfect strategy. You still need to take it, critically examine. There's lots of still discretionary stuff that you need to do to examine. You need to look at the max drawdown. You need to look at the win rate. You need to look at the Sharpe ratio. And you can also use Claude, which I'll show you, to help you analyze the strategy. And then you can work out why the strategy performed. I think a big mistake people make when backtesting and using AI strategies is they'll just look at the data and it'll be like, oh, this is the best strategy because it performed the best. But you have to understand why. When was it taking trades? Why did that strategy perform? Is it because it was a volatile period in the market and it was an RSI strategy? So it did well because RSI was constantly oscillating. Is it because it was a breakout strategy and it was a long continuation market? So the market was in aggressive bull market territory. And this is where your discretionary bias towards the market will also inform what AI strategies you select at certain times. Now, obviously, you're not going to get it right all the time, but if you have a bias that, let's say, over the next 2 years, we're going to be in a ranging market on Bitcoin or a ranging market on equities, then the type of strategies that you select will be more biased towards that. Even if they've performed a little bit worse in the past, as long as the data is decent in a similar environment to what you are projecting, then it still could be a good strategy. So I'm just giving you this nuance before we get into it so you understand the fundamentals of how backtesting actually works. But it is an amazing tool. It's an essential tool if you want to understand how your strategy would actually stack up in the environment that you're trying to trade. And I think every single person should be running their strategies through backtesting and creating their own strategies and indicators on Claude that they can actually test their strategies against prior data. Because if you're just making it up on the go without an inkling or without the data to back up, hey, in a similar environment in the past, did this actually work? Then you're essentially trading blind. That's why these videos I'm making right now are such an important prerequisite for what we're about to do, which are forward tests. But first you need to understand this. All right, so we have the results. 500 executions. So I'm going to rank by out of sample so I can actually see what performed. So now this is in order of performance. So the number one strategy received a 289% return out of sample. Out of sample is the final 30%. So if you click into the strategy, you could see the full profit over the full period, including in sample, which is the first 70% up until November 18th, 2023. And then the out of sample, which is the final 30% from November 18th, 2023 until today. So you can see the win rate is very similar across both time periods, and it actually had a better Sharpe ratio in the most recent period, which means that it has better risk-adjusted parameters. We'll look through in a second why this was actually the best performer, but let's keep going down and looking at the rankings. So that was a Donchian breakout strategy, which is where traders buy when an asset's price exceeds its highest high over a set period. So this is essentially one way to execute long continuation, because when price closes above a prior high, you're essentially entering positions. This helps you capitalize on extended moves. The interesting thing about this is that it performed well on Ethereum, even though the last few years haven't been that good for Ethereum. So I'm keen to dig into the data. Now, we did this across crypto because it's the easiest to get data from, but in the future, we can apply this to stocks as well. Any stock, any index, it doesn't really matter, but you can see most of the strategies that performed well are across Doge and ETH. If we want to filter for Bitcoin, we can search BTC, and then we can look at the best pure strategies on BTC. So the best one on BTC in particular was the MACD trend, which had a net profit, a combined profit of 52.2%. The out of sample net profit was 86.1%. You can see at one point, the $10,000 account was $23,700. I'm very keen to see how much money the top strategy, the Donchian strategy, actually performed on ETH, because I think the number could be crazy, potentially even 6 figures plus. But it has round tripped over the past few months, likely because Bitcoin has been in a downtrend, so it hasn't had clear price action. But this is just the chart that's built into the app. When we actually put it into TradingView, we get even more data. But let's go back to our top strategy here on Ethereum and look at some of the account data. Okay, that's more insane than I thought. $544,818. And it's actually maintained. It hasn't really round tripped too much. It's been a pretty, obviously it's had some downs, but a pretty consistent grind to the upside. So I'm keen to actually look into this strategy even more. And we could actually also apply it to Bitcoin. All right, so how do you actually apply it to a real chart? What you want to do is you want to click Export Pine. This is going to give you the exact tested spec for you to put into your own TradingView. So we click Copy Script. Then you go into TradingView. Of course, this is on Ethereum, so we want to pick the Ethereum pair, ETH USD. I'll just clear my chart quickly. Then you want to click on this pyramid logo. It's on the right of my face, but look for the pyramid that is in the bottom right corner. Click on Pine. This will essentially open up the Pine editor. We'll add the new script. We'll click Publish Script. We'll click save. All right, we now have the strategy in TradingView. You can see that it has a total P&L over the time frame of $238,000. Now, if we compare this to the results on the engine, you can see that the combined net profit is roughly 50% on TradingView versus the engine. Now, it's the exact same strategy, but there are some nuances in terms of how TradingView actually reads the data. So if you backtest strategies with similar logic yourselves, which you can do using the link in the description below, become a member of our newsletter and you'll get access to the backtesting engine on GitHub. You won't be able to build the full application. That's a different build, but it'll give you the basics of being able to backtest strategies. Just understand that TradingView looks at execution slightly differently. So for example, TradingView sees the candles firstly from Bitstamp. If you're using another data source, that is going to skew the data a little bit, but that is minor. That might compound like a 0.01, 0.02, percent per trade over time. The big swing, so the big difference between my engine and TradingView, even though it's the same strategy, is my engine is actually built more pessimistically. So on bars, so on candles where there's like a big wick in a 4-hour period, so minus 3% to a 6% target, which is in the strategy, my engine will book the stop, whereas TradingView guesses the path from the bar shape, meaning TradingView is actually slightly more optimistic. The reason why my engine performed slightly better than the same strategy on TradingView is that my engine avoided slightly less downside over time, which compounds. So the difference is actually over the 758 trades, around 0.1% per trade, which is tiny, but that compounds over time because, you're compounding and you're increasing size over time. That's why the discrepancy looks so big, but the trajectory is almost identical between my engine and between TradingView. I just wanted to make that clear because sometimes you'll be backtesting strategies on Claude and it will look different in TradingView. But what you can actually do is you can go onto Claude Fable and you can also ask, why there are discrepancies, because at the end of the day, you're not looking for the most profitable strategy on TradingView. You're looking for the most profitable strategy in real execution. So as closely as possible, you want to recreate a real trading environment that you would actually execute upon. And obviously there are other things to consider like brokerage fees, how aggressively you compound, etc., which is going to change the model in practice. Now we actually want to understand what a strategy does. We know this is an outlier strategy, but why is it? So if you click on this icon here and then click download, you can download the entire CSV, you can paste it into Claude, and you can ask, hi, Claude, could you clearly explain what the strategy does, why it's executing when it's executing, and why it was so profitable, in what environment was it profitable, and what does the data in sample and out of sample tell me about how this might behave in the future, and how would you improve it? Because as I said before, the goal is understanding how these things actually work in practice. And I can pick any one of these strategies and backtest it on TradingView. But what I'm also doing is I'm using Claude as a companion to modify the Pine script to change or slightly tweak certain parameters, keeping the framework, but tweaking the stop loss, how it actually executes on certain candles, and any variables which can actually impact compounding over time. While I'm waiting for that, I'm also just going through the Bitcoin strategies because it's an asset with a bit more liquidity, a little bit more predictable, something that I prefer trading versus Ethereum or other assets personally. And one strategy that's catching my eye here, obviously the first one, but the first one has a pretty big drawdown. The second one only had a max drawdown of 15.9%. And it had a very high win rate, 45%. So just scanning the data, the EMA cross actually looks very good. I showed it in a previous video. Make sure you go and watch it. This is probably one of the best ones to run on Bitcoin. And if you want to see the full back test, go and check out this video. It's very good. But now Claude is finished analyzing the strategy on Ethereum, and it explains what the strategy does. It's a classic Donchian channel breakout, total style momentum on ETH 4-hour candles. When a bar closes above the highest high of a previous 38 bars, it buys at the next open. This is interesting because a lot of you guys probably trade similarly. Like even if you're a discretionary trader, right? Something you probably do is look at like some sort of strategy where you identify like the prior high and then you wait for like a close above and then you're long. This is executing a similar thing, but obviously the parameters you can't, this is like classic momentum trading or breakout trading, but the parameter that you could adjust are the parameters around the high, because this is 38 bars, 6.3 days. If you're executing on a lower time frame, you might literally look at like 1 day, and you could play around with that and see what the results are like. Like you could ask Claude to keep adjusting based on different time frames and get it to see which specific entry triggers tweak or improve the odds, but you got to make sure it doesn't impact your Sharpe ratio too much, your risk adjusted returns, which are really important. important. So it says in practice, it's not a long horizon trend following system. Targets hit in 29 hours on average, stops in 19. The real bet repeated 758 times is after a fresh 6-day extreme price continues 6% further before it retraces 3%. When it fires, a new multi-day high or low only prints after one sustained directional pressure. Someone is absorbing all available supply or demand. The strategy is betting on herding and information cascade. Breakouts of widely watched levels trigger stop runs, momentum chases, and forced liquidations on the other side, so the move continues more often than chance. That's why entries cluster in violent weeks and vanish in quiet ones. No new extremes, no trades. This is important. Why was it so profitable? The edge is thin and the compounding is heavy. With wins averaging 5.72% and losses 3.13% net, the break-even win rate is 35.4%. Realized win rate 41.3%. That gap is the entire edge. Compounded 758 times, which is how many trades it took. At full equity, it becomes 24.9x. Two structural facts worth mentioning. The winners are uniform, not fat-tailed. The 6% cap truncates every winner to the same size, and the shorts are the engine. Crypto crashes are faster and cleaner than rallies. Down moves reach 6% before bouncing 3% far more reliably than rallies do to the mirror image. So that's one of the reasons why the strategy maintained profitability in the downtrend. That was one of the questions that I asked before. How Claude would improve it. And this is the next step that I want to get you guys used to doing when you are creating your own strategies. You want to look for ways to improve. And don't just rely on Claude. Use critical thinking around how you think about the market. But these are some good tips. Parameter sensitivity map. As I said before, you can test multiple variables. Walk forward plus cross assets. So you could refit on different windows, on different asset classes. And, if it's only working on Ethereum and no other asset, that's probably, a worse sign than if it is working on multiple assets. Typically with the strategy, you want to look for, in similar asset types, performance over similar regimes. So periods of bullishness, bearishness, or sideways periods in the market. Because if it's only working on one specific asset, then that is a signal that it's just overfit towards that asset specifically, and it's not applying to the general trend that you're trying to capture. Because as I said before, when you're picking an AI trading strategy, you're trying to do it for a purpose. So you want to make sure that more often than not, it actually serves that purpose. And probably one that's very important is number 6 here, sizing below 100%. So this is running an example on full equity sizing. Obviously, you want to have a max limit per trade, which is going to change the numbers significantly. You would never be going, all in on a trade, or, using even linear amounts on a trade. Like the way you want to trade in actuality is similar to the Garch method that I taught on my last video. Based on volatility, this is why we're building the blocks on the channel, because that video talks about sizing. And sizing is like one of the most important, if not the most important parts of trading. Because in a highly volatile period, you might want to take on less risk. Like maybe you wouldn't match the same size if price is just wicking up and down. So you want to understand what period, what regime you're in. That's why we came up with the violence indicator in this video. And based on that regime, it'll impact your position sizing. The limitation to backtesting like this is it doesn't show what you would have done in terms of sizing in each environment. So you can actually do a multi-stack strategy where you use the Garch method or a volatility method in order to limit downside risk whilst applying the new strategy that you're trying to test. I know that's kind of getting complex, but it makes sense if you watch all of my videos, because I want you guys to have a full understanding of how AI trading actually works. There's too much bullcrap on the internet, and I want this channel to be like the no fuss guide to AI trading, so you actually understand what it is, what it can do, and what its limitations are. So going back to the board, I can look at a variety of asset classes. I can look at a variety of profit percentages, max drawdowns, etc. And I can keep testing strategies. I can even take this data and run it through Claude specifically. So what I want to give you, because I can't give you this exact website yet, it still needs a lot of improvements and adjustments, and I need to decide how I want to launch it. What you can do is go onto my GitHub. If you use the link in the description for free, sign up to the newsletter, you'll get access to this. This has the entire backtesting engine that you can then use. So you can give this to Claude Code and you can develop your own backtesting methodology from the Binance public API. And if you want stock data, you can use Alpaca. So what you'll get is real historical crypto candles from Binance, Alpaca for stocks, CSV import. You'll get the top strategies built in. You'll get configurable strategy presets saved locally in the browser. And then, of course, you can level up and, deploy your own application, but that requires a lot more effort. I've been working on mine for weeks. So hopefully this is really helpful for you guys. I'm trying with every single video to not only teach, but also empower with real assets that you can go and test. So I feel like a great way if you're trying to level up your AI trading to actually treat my channel is watch the video, absorb the knowledge, then take the test that I give you and do your own homework. So put this backtesting engine into Claude, start trying some strategies for yourself, fit them over TradingView, ask Claude lots of questions, try and get an understanding. And if you do have a Claude skill for your own trading strategy, try and understand how your strategy could be applied to the new backtest that you're doing. So I think I'm going to leave it at that for today. Thank you guys so much for watching. Have a lovely rest of your day, and I will see you in the next video. I've got some bangers coming soon, so make sure to turn on notifications. I've got some absolute bangers. We're going to start doing a lot of live tests now because I'm going through the theory, but I also want you to see how I actually execute in real time. I've got a $20,000 challenge that we're doing, all sorts of cool methodologies around AI scraping to find alpha. It's going to be awesome. See you in the next video. Peace out.